Hi, my name is Brandon Hunt with Strategic Capital Fund Management, and today I wanted to give you a little bit of a background on what's going on in the digital infrastructure market. And if you may be familiar with traditional physical infrastructure like roads and bridges, airports, railways, et cetera, that carry physical traffic, digital infrastructure really refers to what carries, stores, and processes our data or digital traffic. And so in digital infrastructure, that could include things like data centers, for example, which might be cloud computing or co-location facilities, internet gateway properties, or even particularly with the onset of 5G technology is what we call edge computing properties. On the telecommunications and wireless front is also considered a digital infrastructure asset class. So that would include your cell phone towers, fiber optic networks, small cell distributed antenna systems. And so really at the core of it, these are critical assets that support our connectivity. And I think as we've evidenced this year, it's become a very important, essential part of our modern economic fabric, right? And it's really designed to support the way that we live, work, and play. What's really interesting about the digital infrastructure market, particularly now, is that it's a very resilient asset class. So it's an inelastic business. It's often considered by many as a fourth major utility, so very utility-esque type of risk-return profile, generally performing well through all different types of macroeconomic scenarios. And so we've seen solid performance not only during past recessions and other types of scenarios, but also for this year during the novel coronavirus and COVID-19 and the impact that's had on the global economies, the capital markets, and various asset classes. Digital infrastructure assets have broadly performed very well, right? Because these just simply don't have any foot traffic demand, driving returns for the business. So I think the performance for investors, some of the key benefits is that it just doesn't correlate with the broader economy, right? There's not really correlation proven between what's happening with GDP growth or slowdown to leasing activity in a data center or in the cell tower business, for example. So I think long term, the growth and adoption of technologies like cloud computing, the Internet of Things, 5G or the fifth generation of mobile broadband technologies, I think there's really tremendous room for growth long term.